Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by an unknown. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We have the Dow Industrials up 191, Nasdaq up 56, S&P's up 23, gold contract up $2.40, trading at $1,220 an ounce. What you have with gold, folks, wide price spread, accelerated volume yesterday, followed through today. We're at $12.20. You get an ABC structure with a price target of $12.46. Silver up 21 cents at $17.43. Silver also had two good days, wide price spread, accelerated volume. Silver wants to run up to that 18.20 area. Platinum up $10 at $1,159. Light sweet crude down 73 cents at $59.70 a barrel. Bonds, we had the 10-year up 12 ticks, 127.11. 30-year up 12 ticks at 152.30. And King Dollar down 218 ticks at 93.42. The euro is up 53 at 114, and the yen is trading flat at 119.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. If we go to the world of the SPY, the S&Ps, folks, what do you have? You're closing at your high. You're at 212.21. The high out there was 212.24. We hit the 212.32. We've done volume of 90 million, which is short volume. We should be banging out about 155 million. That's on the daily. On the weekly, what we're going to have is that thus far in the weekly, we've done 380 million and 380, 480, 580. We're going to be shot about 100 million there, too. That being said and done, I suspect what we are going to have is we're at the highs, and it's going to make a run for the actual high. Meaning of that 212.24. If we go and we take a look at the futures, what you have with the futures right now, the E-mini futures, trading at a price point of 217.50. 217.50, folks, gets you over the most of the highs. We had a spike high on the 27th, which is 219.75. I expect in the night session, more than likely, that's going to get hit. That's your S&Ps. We go to the NDX 100. We take a look at the three Qs inside the NDX 100, and what you're going to see there is this. NDX 100 is trading at 109.58. The first high that was established was the 109.42. That was going back on March 2nd. You're over that. This is going to also get up into the 111.16. It's going to try to at least test that area. The small caps. Now, the small caps are your weakest indice. The small caps just can't seem to get out of their way on the way down. The IWM is traded up $1.30 today. We're at 123.79. You did 23 million. Huge contraction of volume once again. It doesn't look to me like the small caps are going to make the high. The small caps are still in a very large ABC structure on the way down. Gold contract. What do we have with gold? What we have with gold is this. Gold took off topside yesterday. You had wide price spread, huge volume. Followed through out here today. Yesterday, what we did is this. We went from a price point of $11.90 to $12.18. You did that with 242,000 contracts. The swing point that you're going into is the swing point that was established on the 6th of April. The high of that swing point is 1224.50. We're right at 1221.60. We've hit 1227. We hit that swing, though, which is cool if you're a bull in the gold market. We hit that swing today with 1.6 million contracts and, no, I'm sorry, 162,000 contracts, 1.6 million. That'll be a trip. That swing point only has 100,000 contracts. So we have an ABC structure on the way up. Your first price projection out here is at the 1249. If we take a look at the GLD, now this is pretty amazing when you take a look at the GLD because complex ABCs, you know, you see them. This one here was just amazing, though. So the GLD is did the first ABC structure on the way up. It had taken the B point out on April 1st. You know, we went over the B point. The B point on the GLD, which GLD trades at 10% of the price of gold, that B point was 115.84. It takes it out on the 1st, takes it out with volume, and then fails, comes back underneath it, which made it a complex one. And then what does it do again? It takes it out again with volume. It does that on April 27th, and then on April 29th, no, it's April 27th and 28th, then fails again, pulls back. Each and every time it's pulled back, it wasn't light of volume. Then what does it do? Then it really blows it away out here yesterday. So your correlations, watch the correlation. First time that we were up and over it on the 1st, we had volume out here of 7.2. Second time, it takes it out again, 7.4. Yesterday, it takes it out 11.7. That's the type of move that you like to see, folks. So what does that mean? Well, on a shorter term basis, it means that the GLD wants to go up and fill the gap from 120.61, which was the gap away down on the 5th of February. The larger portion is that we're going for these highs. The highs that we're talking about is 125, the high that was established in January. That's in the GLD. We take a look at the actual gold contract, and what you're going to see, that high that was established out there is 1309, which is a big move. So it's going to be wild watching this whole gold market. Number one, make the run. Number two, like, why did it make the run? And we're going to go right back to the dollar index because the correlation is pretty direct. The dollar index, folks, has done two separate deals. The first one, which you really want to wrap your head around, is the much larger move. What the dollar index had done is this. It went non-stop. When we take a look at this dollar index and we put this back on a much longer-term basis, what you're going to see is that this is a non-stop move that started approximately a year ago. It started in July of 2014. The dollar index at that point was 79.70. It did a 1 to 2 ABC structure on the way up. Parabolic. It goes up to 100.38. At that level, gave it up. Now, it gave it up, folks, in spades on the way down. So I expect what you're going to see here, this is really what's wild. We're at 93.40 right now. This thing wants to run to 88. That's a large move because particularly we've gone down, and it's only taken us 5 weeks to come off this 100 once we tested it again. I suspect it's going to be the same type of move, a very fast move. Because what we had out here in the dollar index today is this. It was subtle. It wasn't a huge amount of volume, but it was big volume. We did 53,000 contracts. When you get a subtle move lower with 53,000 contracts and you happen to be coming into you're coming into 180,000 contracts, you're coming into some good juice because it went up with good juice. That is saying that the market can't hold price. You can't hold price, it's a problem. So we'll see where this whole thing does shake out, but it looks to me like the dollar not only did a large reversal, that large reversal is going to be going down for quite a while. And what it's going to be about? It's going to be about the bond market. What's really wild here is that the bond market, 32-year bull market, it's over. If we take a look at the TLT, they've taken this thing apart. TLT, the high out there was 138. We're at 119 right now. Whether you take a look at the daily, we take a look at a weekly, you're coming down and you're thundering down with monster volume. And this is all going to be about, there's not enough room to get out of the bond market for the amount of folks that want to get out of it simultaneously. The TLT right now, let's see, 138 to 122, that's 16. That gives you 6. So the TLT is on its way to 106 right now. 106, that's pretty intense. 106 is going to bring you right back to, let's see. 106 brings you back to February of 2014. So there's a lot of disconnects out here, but it's going to not only get down there, I suspect we're going to get down there a lot quicker than most folks think. This is Tom O'Brien. This is TFNN. Dow Industrials finished up 191. NASDAQ up 69. S&P's up 23. Stay right there, folks. Come right back.